Hi, this is Christina with the Jasper Group of Benchmark Mortgage, and today we're going to talk to you about points. What are points and whether or not you should be paying them to get a lower interest rate on your mortgage. Points is the money that you pay when you want to buy down your interest rate to something lower than what the market is bearing. So what does that mean? Best way to describe it is I have a bucket of money to buy an interest rate. Let's say that bucket had $5,000 in it, and that's what I'm allowed to use to do your deal. For example, if 3% interest costs $5,000, there's no points associated with it, and there is no lender credit. For every 1/8% that we move in interest rate, the rate either gets cheaper or more expensive. So if you decided you really wanted to go to 2.875, you wanted that lower interest rate, it's gonna cost you. Let's say 2.875 costs $6,000 and I only have $5,000 in my bucket. You can choose to pay the $1,000 difference. That's points. But typically, I do not recommend anyone pay points. And the reason is, in reality, moving an 1/8% in interest rate up or down is not gonna make a massive difference on your monthly payment depending on the loan size. So if you paid $1,000 to get 2.875 and it only saved you $10 a month in mortgage payment, because it's gonna take you 100 months of saving $10 a month to make up for the $1,000 you paid at closing. So unless it's a sliver of points, I typically say that you're not gonna be able to save enough to make up for paying points. So now, what if you went the other direction? Let's say you found the perfect house and it needs $5,000 in renovation to update a bathroom. And you're like, oh, if I only had that extra $5,000. One option would be for us to go up in interest rates. This is the opposite of points. This is lender credit. So we can go above that 3% interest rate, and every time we go 1/8% higher, I can give you a higher and higher lender credit until we pay all of your closing costs. I cannot cut into your down payment, but I can pay your closing costs, and that could divert $5,000 towards the renovation or towards your down payment if needed. So that is what points are and a lender credit is, and the difference between the two. Again, this is Christina Jasper with the Jasper Mortgage Group. Thank you so much for joining us to learn a little bit more about points, and I look forward to educating you on more aspects of the mortgage.